Everybody should do this, even taxpayers who have not been filing their taxes on their cryptos. All right. So even if you're one of them, please do this. Nothing, the safe harbor plan does not go to the IRS. Nobody knows you've done this. It's just your private records. Okay.
Today, we will talk about crypto taxes, which is not a particularly exciting topic, but as we go into 2025, where the expectations are extremely high, it could come in handy for when you have to file taxes in 2026 regarding any profits taken in 2025. I came across a video from Crypto Tax Audit and Thinking Crypto who explained it extremely well. And I only want to comment here. Once I get through all of the commentary, I will explain how I handled this and how you can too. And just to be 100% clear, this is not financial advice. And on top of that, it is not tax advice. I am more interested in this than a lot of people are because even though I was an engineer in oil and gas and energy for about 10 years, I have spent about the last 4 in the tax consulting space where I work to help people reduce the amount of taxes that they have to pay. To summarize everything happening here, I would like to start out with a clip that provides an overview of the changes and the requirements.
Everybody should do this, even taxpayers who have not been filing their taxes on their cryptos. All right. So even if you're one of them, please do this. Nothing, the safe harbor plan does not go to the IRS. Nobody knows you've done this. It's just your private records. Okay. But I can really save you a world of hurt if you do this, even if you're a non-reporter, because what this allows us to do is it stops the IRS from going back to your crypto transaction records in prior years, starting with 2024 and going back into prior years. And as we all have frustrations getting those crypto records, and exchanges have closed down, the records are incomplete, they're unstable. You can't get all those records. So there's lots of holes in the data. Well, this establishes a new baseline for all your records, and we will no longer go back to those prior years to calculate your gains. So this is everybody. This is good for everybody. Trust me, the IRS wants you to do this, right? And as somebody who defends you in tax court, I want you to do this, right? And it doesn't take much work. Just sign up and then do the screenshot, which is a.
I have recently posted about crypto and taxes a couple of times, and it is largely met with a lot of people who claim that because there is no legal clarity, then all of these requirements with the IRS do not count. And while in principle, I 100% agree. And because of all of the rabbit holes I have gone down in regards to the US government, and particularly the lawful clarity of the establishment of the IRS, I just want to publicly say that I completely understand why you feel that way. However, the painful reality of it is that if you do not comply, then when you go to take your gains and you are required to file taxes on those, if your income, which is going to be reported by the KYC exchanges acting as off-ramps, if that income does not match up with what you report on your tax return, the chances of an audit increase a whole lot. And if you end up in an audit, which you might not have it happen right after you file taxes, you will be held accountable for the taxes that you didn't pay on top of penalties. You are always able to challenge it. However, the IRS has a lot of legal firepower. And I think we have all seen evidence of that, even if it's not a direct example, because of the SEC versus Ripple case. Cypress Domanicor put out a post earlier that provided a high-level overview of what the crypto safe harbor actually is and how it works. In short, there are some new reporting requirements that are calculating what your original cost basis is. And I think in my own personal application of it, I think that the oldest allocated provision is probably the one that I would go with at this point in time. Because a lot of what I own, I have held for at least 1 year at this point. And a lot of people tend to reply with a comment along these lines. And I completely understand why a lot of people feel this way. However, he replied with a very good point, because if you are chosen to end up in an audit because your reported income does not match what was filed on your tax return, then you're probably gonna have a bad time. Here is the IRS publication that provides these new crypto safe harbor requirements, and it essentially overrides the publication in 2019 that tried to provide some kind of guidance for taxes on crypto assets. At this point, I want to play the most important parts of the explanation in this interview, and I will occasionally pause it to offer commentary.
The IRS came out with regulations implementing this law. It came out in July. We started posting things on it. We started analyzing it in August. We were actually involved in the pre-analysis of it with the IRS, but it became official in September. We started posting a methodology for people to comply. Here's the issue. Here's the crux of it. The IRS has changed how they calculate the cost basis of the coins and tokens that you sell. They have reversed, or let's say they've reversed the guidance that they gave back in 2019 on the FAQs. They are retroactively applying these rules to prior year tax reportings. So let me just break that. What does retroactive mean? Let me put it in these terms. Unless you take action, which I'm going to describe with the safe harbor allocation plan, all your gain calculations that you've done in the past are pretty much wrong.
Retroactive tax changes are not common. However, in my own professional experience, they are not entirely uncommon either. It does tend to complicate things, but there is typically a pretty clear differentiation that is broken down by tax year.
Okay. Wrong in a big way. I had one client, we did an analysis both ways, and there was a $1 million difference or increase in the gain calculation that the IRS would use. Why is this? The IRS has changed the rule of how they do gain basis selection on two ways. One is it has to be FIFO. Some people have used other methods than FIFO, first in, first out. And it has to be on a by wallet consideration.
I would expect that part will cause the majority of the complications. With this change, we are now required to report the taxable gains on a per wallet and per address basis.
Almost all the gain calculation services, by that I mean Coin Ledger, Zen Ledger, Token Tax, TaxBit / TurboTax, all those services do not offer a by wallet method. All right. So if you used any of those 4 or 5 services I just listed, all your gain calculations are wrong unless you take advantage of the safe harbor. Okay.
And that is important because this requirement came out in September. It is technically applicable in the 2024 tax year. And what that means is that when you go to file your tax returns in early 2025, you would be subject to these new requirements unless you complete this pretty simple safe harbor process.
Why is it at risk that these past years are wrong? If you get audited on the prior years, you will be hit with not only the additional tax that the IRS wants to hit, but accuracy penalties of 20 to 40% plus interest, multi-years of interest. This is big. All right. The other services I didn't mention They offered a buy wallet, but typically the default was a universal or single wallet approach, which also is no longer valid. So virtually everyone has wrong gain calculations based on these new IRS rules. You did the right job, but IRS has changed the rules underneath you. Well, we argued back in 2023 to the IRS when they announced these plans. So we said, you got to give us a plan to transition, right? Because we're using your old guidance. Now you're going to apply the new guidance, but we have a transition plan. They did release this in August. And what the transition plan, basically, the summary of the transition plan is, okay, we'll take the unused cost basis from your prior calculations and we'll apply it to your inventory of coins going forward. In a sense, drawing a new baseline for your gain calculations at the beginning of 2025, right?
And that part right there is what this safe harbor is actually all about. In the parts of the tax code I specialize in, there were some really huge changes resulting from the Inflation Reduction Act of 2022. And because of all of those changes, a lot of people were not prepared to be able to meet all of the new requirements. So what Congress and the IRS did was they created a quote unquote safe harbor option where you can still receive that new tax incentive without adhering to all of the requirements which you were not prepared for.
So that's actually wonderful. And I tell you, IRS really wants everybody to do this because they hate doing gain calculations as much as you do, especially because when they come up against me, they're losing. All right. So here's what everybody needs to know. It's a multi-step effort, but you need to do two things. And you have to do it as fast as possible. The deadline officially is December 31st, 2024. All right. But if you're hearing this recording and it's past that date, if it's 2025, you should still do this. I can at least in an audit argue that, well, we didn't do it by the 31st, but we did it 15, 20, 40 days later, and we can be pretty close. I can argue that in a court, okay? So just do this. Here's what you need to do. You have to sign an allocation plan. An allocation plan, and we made it very easy. You go to our website, cryptotaxaudit.com/1099, and it's right in your face. It shows you how to sign a safe harbor allocation plan. What that is basically it's basically an e-signature of a document. You keep a copy, we stick a copy in our files, nothing goes to the IRS. Second step you have to do is you have to inventory all your coins and tokens, right? And you do this, you have to document like a timestamp of when this happens. How do you do this? Well, screenshots, if you're using your phone, you can do usually the timestamp and the metadata. All these things are important. Take the screenshots, save them in a permanent record so don't lose them, right? What we want to do is just simply document where all your coins and tokens are. And people have questions. They go, what about my staking tokens? What about this liquidity pool? It's like, hey, just document as much as you can. Get the timestamps. How would you do that? Like usually in your bottom of your screen, it has a date and time. Capture that in the screen image. Just document every hard wallet, cold wallet, online, off hosted, unhosted wallet. Document everything. And you will work out, and then we'll explain when you sign up for their safe harbor allocation plan. We'll get you emails later in the year to explain what the next steps are and how to move forward. But you need to do a sign up for the safe harbor plan. It has to be documented that you did that. And secondly, take the inventory. Sorry, that was a mouthful.
No, that's great. And thank you for explaining that. A couple quick questions people have. Is the sign up free? Is there any contract or anything like that?
This is totally free. We've made it free for the entire crypto space, and we're not charging for it. We will send you emails talking about what the next steps are and how you can get that done, how you can get help to do it if it's beyond your doing it. But it's totally free for the community.
Page is here at cryptotaxaudit.com/1099. And all that you have to do is hit this button here and you type in your name and email and it creates a DocuSign document and you just complete that and you stash it away.
And then the screenshots that you take, right? Let's say, for example, I use the Ledger hardware wallet and I can pull up the Ledger software dashboard. Is it just a snapshot of the dashboard, or do you need to actually see the wallet addresses?
It's not 100% clear what we need to impress the IRS,
Mm.
but I think we believe that it would be good to have the wallet addresses, and it could be a fraction of the wallet address. You know how they kind of do a dot dot dot, right? That's fine.
Right.
All right.
Right.
If you go like to Ledger, it'll say, well, you have this many Bitcoin, Solana. It'd be nice if you could open that up a little bit and we could see like, oh, you have two wallets of Bitcoin and here are the different addresses. That would be good if you can screen capture everything, right?
Mm.
Because when we have to look at this, may not remember what you did. Just copy everything, document everything.
And does this include centralized exchanges? So let's say I'm using Coinbase, Uphold, or whatever it is.
Absolutely. Now, those guys, you don't have to worry about the address so much, right?
Right.
Because they are using pooled addresses. But you just want to show that on Coinbase, I had this many of this coin, this many of that coin.
I'm going to eat only steak for the next 365 days to lose weight.
This was a
We're not worried about when you bought them or anything like that. We just want to know what do you have right away. And you can do that today. You can do it tomorrow, or if you're doing it 2025, just do it. All right. Now, I will say, a lot of tax businesses are all of a sudden waking up to this need for the safe harbor allocation plan. And I'm sure people have seen things, but these companies, big red flag, if you're just hearing about it now from those companies, means that they really weren't thinking about it. We've had our safe harbor allocation plan up. People started, the first sign up we had was September 12th, and we've been getting them in by the hundreds every day thereafter. So, and I've seen a lot of bad advice out there. I saw one gain calculation service said, "Hey, here's the email. You need a safe harbor plan. Just save this email, and that's good enough for a safe harbor plan." No, I argue cases in court with lawyers. Just saving email is inadequate. So the advice you're getting from these people, you have to think, have these guys ever done this? Have they ever gone to tax court? Do they understand the evidence rules? That's not adequate. So trust me, we've set this up. The e-signature is the way to go, and the screenshots comply with the IRS instructions. So if you do that, you're going to save yourself a world of pain.
And with regards to the screenshots, we're just saving that locally to our computer. We don't have to upload it to your website yet, right?
No, you
Okay.
don't have to at all. If you're our customers, you can take those files and store them on our system, just like to have a backup. That we're okay with that.
Sure.
But really, it's just your own files. And I would highly recommend maybe you stick it on a memory stick and stick that thing in your tax records that you keep each year, because we'll need to break it out later on in 2025 to calculate the baseline. And then we'll need to save those documents for multiple years in case you get audited. So, but we'll send you emails on all those steps.
Mm.
Some people have said, what about NFTs? Screenshot it. All right. Just get a screenshot. The screenshot should always have the time and date stamp on it. Whatever you use, capture it and get it off your phone, get it off your computer into separate storage so it doesn't get lost.
So just to confirm, and I'm recapping for folks who, this is all brand new to them. This is a preventative measure, right? Just in case the IRS gets tricky or whatever the hell they plan to do, that you have this documentation, and if you get audited, you have this information ready.
Yes, everybody should do this. Even taxpayers who have not been filing their taxes on their cryptos, right? So even if you're one of them, please do this. The safe harbor plan does not go to the IRS. Nobody knows you've done this. It's just your private records, okay? But I can really save you a world of hurt if you do this, even if you're a non-reporter, because what this allows us to do is it stops the IRS from going back to your crypto transaction records in prior years, starting with 2024 and going back into prior years. And as we all have frustrations getting those crypto records, and exchanges have closed down, the records are incomplete, they're unstable. You can't get all those records. So there's lots of holes in the data. Well, this establishes a new baseline for all your records. and we will no longer go back to those prior years to calculate your gains. So this is good for everybody. Trust me, the IRS wants you to do this, right? And as somebody who defends you in tax court, I want you to do this, right? And it doesn't take much work. Just sign up and then do the screenshot, which is and if you don't do any trading after the screenshot. So if it's, once you've done the screenshots, kind of lock it in. That's just if you're doing this in 2024. If you're doing it in 2025, what you want to do is make a copy of any transactions you've done from the first to the date that you actually did the snapshot, so that we can actually reconstruct your beginning of year inventories.
Mhm. Yeah, and that's a great point.
Hey, there's a really big question that a lot of people bring up, especially people who don't want to comply. They say, well, hey, Donald Trump is going to throw away the tax code and not going to tax crypto anymore, right? Well, Donald Trump is a great guy. He's a politician now. And, the thing with politicians, how do you know they're lying? The lips are moving, right? So let's speak about that right away. You need to do this. This is the policy. If the IRS changes and all of a sudden it's not taxed, well, that's great. You haven't wasted any time. But if the laws remain as is, you will want to have done the safe harbor allocation. And I've heard rumors from some people in the Trump administration that they want to not tax crypto. I don't think that will happen. I think that is idyllic thinking by people. Here's why. They do tax bonds, they tax stocks, and if all of a sudden there's an asset class where there's no tax, it would steal from the stock market. Everybody would flood into the crypto market just for the tax benefits. Well, that would destroy the economy and depress prices on the stock market. So that won't happen just at that level.
And I'm not sure that I completely agree with that. And it's probably the only thing I haven't completely been in agreement on here. And that is because, yes, if cryptos are classified as a commodity, they would be subject to these kinds of attacks. However, if crypto or if certain kinds of crypto are essentially classified as a payment that is comparable to the US dollar itself, then that would be very hard to tax, because then you would be taxing the increase in the equivalent of fiat itself.